Good morning, welcome to Forex in Four. Today is Thursday, October 20th, 2011. And yep, we're going to start with the euro again today. And as you can see here, we're looking at a 2-hour chart, and we've just hit this sideways range. All right, we know about what's going on over in the Eurozone as far as, trying to deal with the Greek debt crisis and all that. Well, let's get some updates. Yesterday, the rioting in the street, or I should say strikes rather, in Greece took place. All right, Molotov cocktails, tear gas, gas masks, you name it. They're getting pretty angry over there, and that's because they're facing the latest round of austerity votes. And these need to go through because the Troika is reporting back to the Eurozone ministers where Greece is insofar as what they've done about their budgets. And right now, the word is that everything they've done to this point is insufficient and needs to go further. So there's going to be this another vote on austerity, which is likely to anger the Greek people, but it's going to possibly prevent them from a default. And that is to say that, maybe if they go through all these austerity measures, they might not be able to avoid default. So it's hard to say what's going on right now, but there's still talk about the expansion of the EFSF, all right, and that they're going to come in and they're going to start buying bonds in the secondary market, the ECB. So there's a lot of talk being bandied about here, but essentially we're waiting for the Troika report to the Troika is the IMF, ECB, and European Commission to let everybody know where Greece stands. So if they're satisfied that Greece has done enough, all right, then maybe we move forward this weekend with the meeting, and they come up with some sort of plan that's going to try and tackle the debt crisis. But right now it's still up in the air, and frankly, it's the process is slow moving. It's kind of going at a glacial pace, which world markets don't like. But you know what, Europe's going to do what Europe's going to do, and that's pretty much going to be it. So you can see here, sort of trading this range here. All right, bottom about 136.50. All right, high about 139. This is a 2-hour chart, but you can see this has been for the past week or so. We've just been sitting a little bit higher. I wanted to show you real quick before we get into the news. Gold. All right, gold, we pulled out on Tuesday. I made a call here talking about a bull flag that had set up, and actually it looks like it's just confirmed. Okay, we got to close beneath 1640, which was our initial flag price, and actually probably could have been up a little bit higher as the market kept moving, but nevertheless, so we're in this condition. All right, we see the next move is going to be down to probably a 1500 first target, and the second target is going to be about 1440. All right, and we're just looking at the daily chart. Essentially, this bear flag, if it's going to complete, that's what we're going to be looking at. So keep an eye on that. All right, there could be some decent momentum there. We've got resistance short term up here at 1700. So you figure at this point that's about a little bit less than 2-to-1 risk to return at this point. So reward to risk rather. So just keep an eye on that. Let's see here. Oh, it looks like, let me go back to Euro here real quick. You can see, it looks like we're still moving. This is the daily chart. Let me get back to the 30-minute chart. It looks like we're actually just came off just a little bit here, and we've pulled back. Germany reported their growth estimates for next year. They're saying GDP is going to be about 1% next year, down from 2.9%. So that's not a good number. All right, so we could see some further Euro selling. Just want to show you the pound here. Pound got a boost from their retail sales figures. All right, retail sales came in much better than expected, up 0.7% versus an expected 0.2%. All right, you include auto fuel, and it's up 0.6% versus a no change. So, the numbers over in the UK continue to defy the logic, and basically, I feel like the BOE just has it wrong at every step of the way, and perhaps it has something to do with the 5.2% inflation. Okay, if people are fearful that the Bank of England isn't going to do anything about inflation, that perhaps they're going out and they're consuming now. And that's one of the things about inflation, is that it's not just what prices cost, but it's the expectation of what they're going to cost in the future. So I think the Bank of England's playing a little bit dumb here, and they're actually encouraging economic activity by allowing this inflation to get out of hand. So we're going to have to see how that goes, though, if it reaches a point where all of a sudden it just grinds the thing to a halt. So keep an eye on the UK, but for now, better than expected retail sales figures. All right, you can see we're sitting just up under 58 right here, just above the daily pivot at 157.70. So we could get a bounce higher up to this 158.50 area if we get some continued risk appetite. And right now, U.S. stocks look poised to open higher this morning with the futures. All right, decent earnings keep coming in, and we know about U.S. corporate earnings that a lot of these companies have slashed their workforce. They're lean and mean. They've got cash on the sidelines. Business is not booming, but it's not doing horribly given the current economic climate. All right, and they're just sort of waiting for that turn in the markets when things start to get moving again. And what's going to make that happen? Well, you got this debt debate going on in Washington D.C. You've got the super committee who's supposed to be trying to tackle this. All right, there's so far has been little hope for this thing, but you never know what can come out of it, especially when doors are closed. If we start hearing information being leaked to the press, then I think it's going to be a bad sign. But right now, supposedly they're staying tight-lipped and they're going to continue to try and move forward. So that's kind of what we're looking at there. Let's just take a look at the Aussie. What do we have going on with Aussie? Going to pull it back a little bit here. We identified, was it yesterday, 2 days ago? Basically a little bit of a double top here. Okay, called that one. That was actually a nice little move on the short term. All right, we got up just above that S1. I think I'm calling for it to move just back to above parity, which was just above that S3 figure, I think. So we'll see what happens. Okay, right now, still some risk aversion in the market. And I think we're going to see a lot of it going into the weekend because of the uncertainty about what's going on in the Eurozone. So you can see that's why we've sort of been trading these tight ranges. And you can look at there's sort of been a range here as well, 103.60. All right, bottom 101, I'll call it 102, say. So been in a range there on Aussie. All right, they actually had what was it? Business confidence figures came out. They were worse than expected. But listen, right now, nobody's really feeling anything. If you think about it, it's kind of like we're in wait and see mode to see what's going to happen with the Eurozone. All right, we can look at dollar yen here, and you can see that this thing is just, outside of this move here. All right, we've just been pegged in this range, 77, 76.50, and this isn't really going anywhere. So, not a whole lot of stuff happening. All right, maybe we get some bounce here today with the correlations in the market. Okay, maybe euro moves higher. If stocks continue to move higher, maybe we get an extra push here in the pound. All right, one that we haven't looked at in a bit is dollar CAD. Let's take a look at see what that's doing. Not a whole heck of a lot coming out of Canada. And you can see it's just sort of meandering a little bit lower. I'm surprised actually that we're as close to parity as we are. I thought we'd be up maybe a little bit higher based on what we've seen recently, but it looks like we can come back down and test these lows here and see if we can get close to parity. It looks like we still haven't hit this oversold area yet, so things are looking all right there. I think some of it has to do with oil prices. We've seen oil price spike recently, but it's pulling back a little bit on the slowdown and the worries. So let's see, U.S. session. We're going to see what happens here. We've got continuing jobless claims, initial jobless claims, 400,000. What a shock there. Existing home sales are going to be out. We're expecting 4.9 million. All right, leading indicators are out. We're expecting a rise of 0.2%, and the Philly Fed is also out. We're expecting a negative 9.5. Now these are all going to be later this morning. Existing home sales as well. We're expected to decline 2.6%. That's interesting. We'll see what happens there. Housing numbers have been pretty good recently, but some of it they say is weather related, so we'll see. And then lastly, we've got some Fed guy speaking later in the afternoon as well. So you never know what these people are going to say to potentially move the market. So that's kind of what we're really looking at today. Tomorrow in Canada is their CPI data, so we'll keep an eye on that as well. But we'll see if stocks can make a push here. Some last breath risk taking occurs, but I think tomorrow we're going to see a little bit of a selling going into the weekend ahead of this ECB meeting. So that's what I'm looking at, gang. Good trading to all.